Welcome to the BNB Investing Podcast for real estate investors. Fix and flippers and realtors exploring investment options with Airbnbs and short-term rentals through acquisition, leasing, or management to generate consistent monthly revenue. Join us for a chat with experienced and successful short-term rental investors to hear their story of how they got started and created wealth by building scalable businesses. We also explore various service providers and lenders that help make our businesses more efficient and maximize revenue in this awesome sharing economy. Welcome your host, Rich Munroe.
Hey everyone, Rich Munroe here with BNB Investing Group. Thanks for jumping on this week. And so just as a reminder, BNB Investing Group helps short-term rental investors navigate the short-term rental model, whether you're looking to acquire properties through the master lease strategy, or if you're managing properties. And so we typically like to look at different niches and different angles in the space. And so I'm happy to have Ben Wolff here with us today from Onera and is it Oasi? How you pronounce it?
Oasi, yep.
Oasi, okay, cool. Cool. So thanks a lot, Ben, for jumping on and taking a little bit of time with us today. I really appreciate it. Let's kind of start out with how you got into short-term rentals and kind of how you got started.
Yeah, happy to chat about that. So I was actually doing some business development work for a short-term rental group pretty early to the property management side of things. They started a company back in, it was like 2012, 2013 or so, starting to manage Airbnbs. So I was doing some business development for them. And I had, I ended up starting to build my own lease arbitrage portfolio that they were managing. I ended up kind of leaving working for that company and went into software sales, but I was still kind of building my lease arbitrage portfolio on the side. And from there, was kind of picking up units here or there for a couple of years. And by like April of 2018, I think we had 8 or so units. And I had a number of friends and colleagues that were interested in building portfolios as well and having us manage them, my company. So I built up a small management team and, offshore team in the Philippines. And, I was handling pricing, had a, ground manager and cleaning crew and all that, and started managing properties and helping, these investors get leases themselves. And then we would manage the properties. So I quit my job in 2018 to build that full time. And then grew it from 8 units in April of 2018 to 200 under management by the end of 2019. And
very nice.
Then COVID hit. Most of our units were urban. So we shifted to like mid and longer term stays. But thankfully we were lean in terms of corporate overhead. So we were able to kind of survive that. But the money was definitely not the same in those early COVID days for urban rentals. So that's what really pushed me into looking for land and building what became Onera, which is a luxury treehouse resort in the Texas Hill Country, which is, what I'm more known for now.
Okay. So you kind of pivoted a little bit from urban properties over to kind of these niche specialized treehouse homes. How many homes did you end up developing for that?
Yeah. So raw land, and we ended up initially we built 8. And it was a mix of a whole bunch of different unit types. So, we wanted to see what worked well operationally, what was going to get the highest rates, how much was it going to cost to build. And we had a mix of soft-sided, more tent style units, and then hard-sided container homes, custom tree houses, things like that. So we had 8 initially. And then later on, we did add 3 more smaller container homes, which are really more like mid-tier product for Onera. Most of the units are higher end, more spacious, luxury, really nice private amenities. And our ADRs for those other units are, $500, $600 a night plus at pretty high occupancies. But those mid-tier units, it's interesting, really drop off a cliff in terms of ADR and occupancy. It's the RevPAR on those is like a third of what some of the other units are. So it's really pushed me in the luxury, really build more unique, high end, one of one stays.
Yeah. So those of you jumping on, please throw a yes in the comments if you can hear us okay. Feel free to throw any questions out there as well. We're going to start looking at some really cool properties that Ben's been working on, stuff that he's currently got up and running and stuff that he's got in the pipeline. So I'm just curious, Ben, what got you comfortable with kind of branching out into kind of tree houses and these kind of luxury high end versus just kind of a traditional build? I mean, what there have to have been something that got you comfortable with taking that plunge?
I think it's a lot of things. I think first of all, I've always been, relatively comfortable with risk if I thought the reward was there. My thought is that, hey, I can always go and get a job if it doesn't work out, right? I've been pretty employable before, and I think I could get a job if I need to. In terms of like more complicated build, I had never built anything before, so to me it was like, I didn't know how easy or hard necessarily a house or a more traditional hotel would be to build versus, these tree houses and container homes and stuff like that. And I ended up finding a tree house design build firm, very boutique and small. We actually kind of outgrew them pretty early on, but they helped really, with the full design and build out of Onera Fredericksburg. So, had them.
Very cool.
Had some good consultants and, figured out a way to get it up and running.
Nice. So you kind of relied on them, that they already had the existing infrastructure and expertise, and you kind of tapped into that for the first project.
Exactly.
Got it. That makes sense. Well, let's dig in here and take a look. Let's, I guess, start with the one that you've already got up and running, the Treehouse Resort.
Yeah, so this is Onera. What you're seeing right now is Onera Fredericksburg. That's our first location. And let me actually show. So I can show you guys a good video. I'm actually going to show this teaser that it shows the property.
So I think it's overriding your audio with the video.
Okay.
If you can mute it, or
can you hear me now?
Yes, I can hear you now. Perfect.
Cool. Yeah, so this is Onera Fredericksburg, where we are now. This is the Monarch, our custom treehouse. This one's the Spyglass, more of a tube-shaped treehouse style. Two of our highest performing units. We have this elevated tree deck and container pool with a barrel sauna and this whole amenity area that guests can use as well. And it is 11 units, like I said, currently doing about 1.6 million in revenue. And really, like, our higher end units are doing, $200,000 a year, or close to that or more.
And what was the cost to get that first unit set up? Was the first one the cylinder one that you showed?
So we really built them kind of all around the same time. It wasn't, yeah, we didn't really do it one by one.
Okay.
And I can't get into the full cost of the project because we ended up selling to a public REIT. Actually, we had an exit, so we sold 90% interest in the project, and they're pretty sensitive about costs.
Of course,
but I can say
that makes sense.
But depending on the unit type, it is anywhere from, the lower end ones that I said only, they're only like $180 RevPAR, like $300 ADR, 50% occupancy or so. Or whatever that is, 340 ADR, 50% occupancy. So those are only, fully loaded, probably like a couple $100,000 to build, including the land and all the soft costs. And the higher end units are, when you include all, fully loaded costs, it's anywhere between $400,000 and $500,000 a unit.
All right, can we replay that video real quick, because it went by pretty quickly?
Yeah, let's do it again. I'll make sure my audio's off so I can talk over it. So this is the second location that you're seeing right now, which has these stunning hill country views. We're opening this one in the summer. It's definitely a big step up. It's 28 units, 12 that are that kind of Spyglass tubular treehouse style, and then the ones that we were just seeing, these ones here, are going to all have vegetated rooftops, so green roofs. So those units will really blend into the hillside. Every unit has its own private cedar soaking tub, and these, incredible views of the hill country. This property will also have an event space, which we didn't have at Onera Fredericksburg. And we want to cater more to groups because there's a lot of demand there. So we have a, 90 person or so event space that's really beautiful. Nice commercial pool that faces this, beautiful hill country view into the west facing. So you get these amazing sunsets.
Very cool. And how long did that project take to get up and running?
So this one here, a lot longer than my first one, Onera Fredericksburg. And it was kind of like a little bit of you don't know what you don't know, right? When I first started getting going in development, we didn't do a ton of planning. We were just kind of, trying to go as things went by. And we got things up and running quickly. We bought our land for Onera Fredericksburg in December of 2020. We started building in January of 21, and we opened our doors in November of 2021. So like 11 months later, we were up and running. I would never do that again. It led to a lot of stress, cost overruns, less efficient build. So Onera Wimberley, we planned for like 18 months, and then now the construction has gone super smooth. We're really delivering a really amazing and superior product to our first location.
Okay. For those of the investors that are kind of more accustomed to kind of doing rehabs, not necessarily new development, walk us through a little bit, if you could, kind of the process. What's involved with that? I mean, are you raising the money first? Are you forming the partnerships first? Are you buying the land first? What's the typical order of events there?
There's a lot that's kind of happening at once, honestly. So I'm doing it right now, and it's this like chicken or the egg thing, right? It's like you need the money to buy the land, and you need the land to, show people that you're serious to raise the money. So that part of it's a little bit kind of simultaneously. Typically, I'm trying to lock up a piece of land for as little money down as I can in terms of option period, and then I'm starting to soft circle money and really going into like hyper speed, money raising mode once the property's locked up. So we'll get a property locked up for, let's say, 60 days in the initial option, and then have like 2 or 3 month-long extensions in order to extend the option period. Or we will say, like, subject to a change of use or a variance or some entitlement that we need in order to do the hotel or do a short-term rental community. So yeah, trying to tie up the property. And then once we tie up the property, or I've identified a property, I'll start to do concepting. So I'll do unit concepting and sketch units and use AI to kind of get initial renderings. And then I'll work with, I have a renderings offshore team, and they'll help dial it in. Usually AI is going to spit something out that's like not believable, and it's a little bit too extreme, right? So we'll have them dial it back, make it a little more realistic, and tweak certain things. So once we have that, we can put it into a nice deal deck, do the pro forma that I have a template for. So those are pretty quick, and then we're going to market for the raise. So that's kind of how the initial period works, and then we go into due diligence. I have a great GC who really acts as an owner's rep in a lot of ways. He helps a lot with entitlements and working with the municipalities, working with the community to make sure we're not going to get a bunch of blowback from the neighbors and whatnot. So we dive into that from there.
And is it more of like a private placement structure when you're typically doing the capital raise, or or is it different?
When you say private placement, what do you mean?
So is it where you're basically doing it through a brokerage firm? You've got accredited investors that are contributing to it, or is it more directed to kind of family funds and more direct investments that way?
So we'll do both. I mean, we'll work with brokers if we think they're good and can help raise capital. I'll also, in certain scenarios, co-GP deals, to get something done, get a local partner. That's what we're doing with our South Florida project that I can show the deal deck of shortly. Found an anchor investor there, knows the local community, has resources and connections, and can help raise more local capital. So we do some of that. And then, just going direct to high net worth, family office, sometimes like, smaller institutional, I would say. And I mean, we have, the public REIT, bought a majority interest in Onera Fredericksburg, and they're, funding a lot of the Onera expansion. So we have worked with, bigger public companies before, but that comes with a lot of reporting and compliance, and it's a lot of resources expended to work with those bigger companies. So for some of these future projects, I'm actually trying to go more private money.
Got it. That makes sense.
Yeah.
And is your preference to do it structured as debt instead of equity, or is it a combination?
It's a combination. So we do equity, and typically we do a GPLP structure like you would typically see in a syndicate deal. For Onera, actually, I raised a small fund originally, very small, like $3.5 million, but we have extended that to about 35 million in real estate. So quite a bit of senior debt, mezzanine or junior debt, and we've had success doing that. But yeah, we do GPLP structure. Like the future deals that I'm doing, the couple hotels that I'm raising for now, are, it's like a 10 pref. So we do a higher pref because our assets are pretty high return. And then we do a 60-40 split above that. There's some nuance and details, but that's kind of the high level structure.
Very cool. Very cool. And so operationally, once your construction's completed and you get the units furnished and staged and set up, what does your operation look like in terms of the management? Is your company also managing those units once they get up and running, or do you have a local partner that's doing that?
Yeah. So Oasi, my company, really handles all the management side of it, and we'll install a local ground manager, and we actually build on-site housing for them now because it's so hard to source good talent. And a lot of these markets, like, the labor gets priced out of the market. So we build on-site housing. It's a perk for them. They're on-site, which is really valuable and helpful if there's an emergency. And for these bigger properties, we're actually gonna have 2 full-time on-site people. And then we have, full-time cleaners. That's a separate group, right? And that's kind of the ground operation. And then Oasi, more at the corporate level, we have about a dozen people across our portfolio of properties we manage, and that's split up between pricing, and guest communications, guest experience. The general manager kind of sits across the whole guest experience team and helps me with a number of different areas. I have a partner that runs our whole revenue management as well as our marketing and media group. And our marketing and media group is like half the company now. So we've seen the value of, putting out thought leadership from myself, building out like ebooks and, video modules and putting content on LinkedIn and Twitter. And, we want to do a lot more of that. And that's not even to mention all the media and marketing we do for our properties. So one of our big differentiators for Onera and our big selling points is that we actually do 75 to 80% of our bookings direct. And we, not going through the OTAs. So we're saving, 11 or 12% right off the top because we price the same as Airbnb. We're not offering a discount. So we scoop that margin. And this has all been done through organic social media. So no paid ads to date. We're just starting to experiment with paid ads now, but it's all been done through, working with influencers and creators to build the audience. And then also producing our own professional content that we turn into reels, mostly video, that we're kind of always tweaking and working on the formula to pump out viral videos. But yeah, at Onera Fredericksburg, we're doing, close to $100,000 each month in direct bookings.
That's awesome. I mean, you basically, and you don't have to, most of the folks that are active in the short-term rental space know how important that is. You're basically controlling your own destiny. You're not at the mercy of an OTA to have your bookings come in. So that's huge. Obviously.
Yeah, 100%. And I mean, we're also reaching a more aspirational or emotional buyer is what we call it. So they're not price shopping, right? They see it on Instagram and they're like, oh, I have to stay there. There's no like basis of comparison for what it's worth, right?
And a lot of times it doesn't really care. It doesn't matter where the location is. They may not have been planning to go there, but now they are. So yeah, so exactly. you get a double hit there.
And and that's actually, I've gotten a little more flexible with parameters in terms of where we build these. I used to want to be much closer to like main streets and attractions, and now I'm a little bit more location agnostic as long as it's close enough to a major metro. But the property itself has to be like out of this world, right?
Well, speaking of that, let's take a look at this next project that you've got coming up.
Yeah, yeah, we can look at a few of these. So, yeah, so let me actually show. So this is the Florida property. This is our deal deck that I was saying we spun up in the last couple weeks. So realized we want to do this concept, found a lead investor, have a few properties that we're soft circling, and we're talking to other investors in the lead investors network. So we spun up this deal deck. I kind of crafted sketched some renderings, sketched some designs, worked a little bit with AI, and then had our offshore team pump out these initial renderings. So this is a treehouse style unit. Oasi is actually going to be the brand of the resort that'll be in South Florida. So it's 45 minutes to an hour southwest of Miami, pretty close to the Everglades. It's a exotic fruit farming hub, like the biggest hub in the US and actually a hub for the world. And we're creating this tropical landscape resort concept that mixes like exotic fruit forest and exotic fruit farming with these very high-end landscape resort style units. So cool. we'll have these treehouse pods. There's another unit I'll show in a minute. We'll have natural looking grottos and waterfalls and these beautiful water features, a farm to table cafe and juicery, an event space, a limited service spa. So it's really this like, little oasis, if you will, tucked into South Florida, and brings the Costa Rica, Bali, Tulum type experience stateside, which doesn't really exist yet. So it's kind of like the first of its kind in that way. This is the other unit type we have now called Greenhouse Grotto. It's got these massive windows off the back. And the unique part about this unit is this private grotto that each of the units will have with a stream that kind of recirculates around and actually underneath the unit, with a transparent flooring where you can actually see the water flowing beneath you while you're in your unit. So pretty.
That's perfect material for your promotional videos and Instagrammable moments. That's awesome.
Exactly. Yeah, we're like designing for Instagram now, right? I mean, we're thinking like, okay, like I don't want to do a project unless we think it can hit 1 million views basically with our eyes closed, right? Like we don't even have to do a whole lot. If we build this, it's so Instagrammable that the marketing kind of takes care of itself. So you can see some of the investment highlights. I mean, we're building properties that are a 16 cap, and selling them. This market is kind of nascent. So the cap rates, like our initial cap rate was in the low double digits, like 10, 11. But we see them starting to compress, and within short order, as we build these luxury landscape resorts, we think it's going to be more like 8 or 9. So if we can build them at a 16 and sell them at an 8 or 9, it's a massive delta, right?
Nice.
So this is an example of like one of the properties we looked at and the kind of things that we can do. This is man-made, which was shocking to me. This grotto waterfall feature here. Yeah.
Yeah.
So, it's a big lift, $53 million project, 48 keys. But we're going to be targeting, mid 800s in terms of ADR and low 80s in terms of occupancy. For a one of a kind product like this, we pulled some comps in Costa Rica and Tulum. And there's one property that's out in the Keys that's somewhat similar, and we're underwriting for way lower ADRs than a lot of these other properties are at. And it's still, pretty high returns, mid 20s IRR, tripling investors' money over the time horizon. So,
is it over what period of time is that?
So it's like a 3-year build, and then the assumption is that we sell after 4 years of operating.
Got it.
Yeah.
And how many units was it, Ben?
48.
48 units. Okay.
Yep. Yeah, and
you were going to mention something. NOI.
What was that?
You were going to mention. You said on another note, and I interrupted you.
Yeah, just we have a very high operating margin for hospitality. Probably, similar to what a lot of this group sees with STR, but we're more like a hotel, and we're still able to achieve, margins in the mid 50s. And typically hotels are operating in the 20 to 30% range, in 20s and 30s. Like a high operating margin for a hotel will be, in the mid 30s. So we're well above that. And that has to do with our limited service model. We have people available when they're needed, but, we're not sort of wasting staff on a lobby that's staffed full time, on a, cleaners that are coming to do daily cleanings, things like that. We're kind of stripping out a lot of the things that we don't think, people care as much about, and investing more in the CapEx, right? These amazing one of a kind units, and kind of giving people their privacy and making that more of the vibe.
Real quick question, as you're on the treehouse, the unique one.
What
I realize the rendering, and you're creating that basically with a clean slate. What does the construction look like on that? Are you able to do 3D printing, or how does that typically end up coming to a finished product?
Yeah, there may be parts of it that are 3D printed. We've always looked at modular, and we're interested in the idea of doing modular. Where we've run into hiccups is, minimum unit count size for a modular group to want to create something custom that we want. Typically that's like minimum is 50 units. And we haven't really hit that threshold yet for one unit type. And then the other thing in Texas, surprisingly, Texas is pretty challenging for modular licensing. It takes longer than other states, so it's just been quicker for us to stick build. But the construction on this is going to be concrete in terms of foundation, whether that's footings or slab. In this case, probably footings, and then structural steel supports, right? Kind of holding it up, allowing for these, decks to be cantilevered and hot tubs to be kind of, suspended up there. So it's quite expensive from a foundation and support standpoint. And then, up at the top here, the way this is rendered, it looks like wood primarily. We're going to have to see if that's going to work in the South Florida market. If not, then we'll use, some other sort of composite material.
That makes sense. How many acres was this again?
So the target property size is 40 to 50 acres.
Okay. Yeah. All right. Very cool. And so this one, what's the minimum investment size that you're taking on investors for this project?
Yeah. So it's an interesting question. We typically do 100,000 and above, but we are really considering the idea of opening that up a little bit. So if there is somebody that's interested at a lower price point, we would certainly entertain it.
Okay, very cool. And so I'll put your email address in the comments below. So if anyone has an interest to get more details from Ben or learn a little bit more about it, you can reach out to him via his email address. Did you have another project besides this one you've got in the works?
Yeah, we do. I can show some renderings on this one, and I'll also let me show some property photos as well. Hold on one sec. Let's see. Hold on. Here we go. So this is what I was talking about when I was saying like just amazing views. This property is a little bit farther out, but it has these just incredible views that go on for miles. It's an area of Central Texas, hill country called Devil's Backbone. It's a famous kind of scenic drive that is right between Austin and San Antonio. So you get these, so it's very well located in terms of proximity, but you get these like unencumbered long hill country views with no houses or power lines or anything like that. So that is, and that's actually probably the best photo that I have of it. So that's that land that we have under contract currently. And we have been working on the renderings for it as well, which I can show you some of those here too. So we have these cliff pod style units facing the view, and we have this earth lodge that we're going to be building that is built into the hillside, has a green roof. All these have their own private water feature, these rooms, and there's a communal space in the middle. We'll probably have a conference room. So this whole unit could be rented out for like an executive retreat or something like
Of
that,
course,
or we
definitely.
can rent them out individually. So that's the Earth Lodge. And this will be the event space. So this one, we'll have a 200-person event space for, that'll serve the whole property, and weddings, corporate retreats, wellness retreats, things like that.
What's the budget on that one for construction, building it into the side of the mountain like that?
So for that specific, it's a good question. I probably need to pull it up. I can tell you the whole project cost is $45 million for same number of keys, 48 keys. So our cost to build in Texas is a bit lower than South Florida. South Florida is more expensive, and the land is a bit significantly cheaper. Actually, it's less than half.
Okay. Yeah. What's the per acre cost in Texas?
So this, we're looking about anywhere from 50K to 100K an acre. I mean, it really depends like how good the views are, the proximity, et cetera. Yeah.
And then Miami's, the one that in Miami is twice that?
It's over 100K an acre. So like this property, we're going to get for so it's a little bit less. We also need less land in Texas. So in Florida, we need 40 acres because of the zoning. Whereas in Texas, I can get like 20 acres, which is really all I need to do the concept. And the land's a bit cheaper. So I'll probably get the Texas land for right around 2 million, maybe less. And the land in Miami is going to be probably over 4.
All right. Very cool. Now, are you working on both of those projects simultaneously during this process, or are you going to tee one up after the other one?
So I'm sure that one will end up going quicker than the other. That's usually how these things go. So they're the two main things that I'm focusing on right now. Thankfully, I already have a lead anchor investor in Florida, and we think we have a site identified. In Texas, I'm working on getting this second tract of land locked up. I have a first tract, and then there's a connected piece that I need as well. But I actually think that if I had to guess, I think the Texas one is going to move faster, just due to like it's easier to build. I have more resources here. We've already like for sure identified the land. It's just a matter of doing the due diligence and closing on it. So if I had to guess, we'll probably deliver the Texas property in 2 years or less, and the Miami one will probably be closer to 2.5, 3.
Okay.
Yeah.
Awesome. What's on the horizon after these two projects? You have aspirations to go internationally, or what are your next goals after these two?
Yeah, it's a good question. I mean, we are investing pretty heavily in the media side of our business, as I mentioned. So we're going to be putting out some educational material, potentially doing some sort of like mastermind type group with a select few folks, like very small, like tight knit groups is how we'd like to do it. And then hopefully helping these other folks that are sort of maybe a little earlier along in their hotel development cycle, but are, have great experience, or sophisticated operators, know how to raise money, and then kind of co-GPing deals with them, helping them raise the capital they need, potentially, helping them manage properties once they're built. So that's kind of the goal next step wise. In terms of like the next property I want to deliver, we probably want to do another tropical landscape resort in Southern California as well, but that's going to take a lot longer than doing it in Florida. So we're going to start with the Florida one, and then at some point we'll probably do a similar concept out there, because those are the only two locations in the US that you can do that kind of tropical vibe.
Got it. Very cool. Well, this is really exciting stuff. Got one last question for you. Knowing what you know now with your experience, if you had, and it's interesting that your next step is going to be helping other folks that are kind of new to this get started as well. What would you, put as your kind of advice to someone that's just starting along that track and, wanting to go into the development side of things?
Yeah, so I would say probably number one is don't like skimp and try to cut corners. I like refuse to do that now. And, for a while when I was still kind of Airbnb hustling, and even early in my developer days, I made some decisions that were extraordinarily penny wise and pound foolish. Like we sourced a bunch of our product from China, and I didn't have like boots on the ground doing quality control and all the rest. And it ended up costing us like hundreds of thousands of dollars in months and delays by trying to save a couple $100,000. So things like that, I wouldn't do again. Same to be said for like paying for a good GC. Like I want my GC to make money because if he's making money, then he cares about my project and he wants to do another one with me, as opposed to just like trying to, have all these GCs kind of bid against each other, come in at a super low number, and then just change order the what out of you. So I have a really strong, long-standing relationship with my GC, and I view that as like the most important relationship for a developer. It's way more important than architect or even investors or designers. Like having a rock solid GC that can deliver on time, on budget, help you underwrite deals from a cost perspective early on is invaluable.
No, it makes perfect sense. I mean, it's similar in our rehab business. I learned that pretty early on too, that it's better to have the quality and just bite the bullet and pay for it than try to skimp. So that makes perfect sense. So listen, Ben, thank you so much for jumping on here. And, we'll have folks will watch the replay. And if anyone's interested in learning more and even perhaps kind of getting on your list for when you're going to reach out to other local folks that want to learn how to start development and kind of, get some possible partnership options with that, feel free to reach out to Ben directly. And would love to have you back again once these projects are kind of already up and running and, see how the progress has gone for sure.
Yeah, we'll be happy to. Thanks for having me on, Rich. I mean, the other thing that I would recommend to folks, if you are interested in the kind of stuff that I do and Oasi's doing, I have a newsletter. So you can, if you find me on LinkedIn, Ben Wolff, 2 Fs. If you just search my name, I should come up. If you add Onera, I'll definitely come up. And you can sign up for my newsletter right there. And I post a lot of content on LinkedIn as well. That's educational and trying to help folks getting started in this area. And Twitter as well. If you're more of a Twitter person, @UniqueStaysGuy is where I post there.
All right. Very cool. Awesome. So thanks again, Ben. And thanks everybody for tuning in. If you want to start building a scalable business and want to get some help with that with BNB Investing Group, feel free to reach out to me directly. We can have a quick call and see where you're trying to go with your goals and objectives and see if we can help. But other than that, we'll see everybody again next week. And thanks again, Ben. Really appreciate you taking the time today.
Thanks, Rich. Appreciate it.
Thanks for jumping on the BNB Investing podcast this week. Please click on the subscribe and like button below. For more trainings, property tours, and content, you can join my BNB Investing Facebook group by clicking below. If you are ready to grow your short-term rental portfolio and maximize your monthly income, you can click on the link below to schedule a quick strategy call with Rich or someone from his team to see how we can help or point you in the right direction. Stay tuned for our next episode and hope to see you on the BNB Investing Group podcast.